I like it when the Smurfs are the first ones here. Welcome, everyone. Hey, Bo, I think they're set at 50 before I get started here. I will double check. Hey, Bo, they're set at 50. I did that so I could do longer term stuff. The 150 setting, though, is still valid. Welcome everyone to the Kendall Report. It is Tuesday night and heading into the big report of the week tomorrow. But before I get into tonight's video, make sure you hit that like button, subscribe, do all those things, hit the notification bell, do the works. Anyway, yeah, so here we come into CPI. Today was interesting day. It was pretty quiet. We did surge up to around the 51 level on the S&P futures, and that was an interesting little surge, and then of course it blew apart in the last hour of trading. So we'll get through all the details here in a minute. Let's go ahead and talk about the There really wasn't any significant numbers, as I mentioned last night. We're looking at tomorrow, CPI coming in, estimated 0.3 year over year, 5.2, the core 5.6 year over year. And I titled this video tonight, CPI shock. I don't think we're going to get a shock. There is a few things that are pointing toward some uncertainty here. I'll show you. I've never seen the hourly chart set up like it is right now. So a lot of it has just to do with this contracting volatility that we've been seeing over the last several days, and it's evident on the daily charts as well. Should be another quick video tonight. There's not a lot to talk about. We'll go through a few things here. FOMC minutes come out tomorrow. There is a whole bunch of chatter around the internet about the Fed going to be discussing, to drop rates and a pivot and all that. Not happening, folks. I'm telling you, they're going to stay with the inflation dialogue, especially if this number comes up as expected. But they already know most of these numbers. They already have estimates or know the numbers long before we do. So I would just tell you that those minutes are going to reflect that the inflation fight is on. I saw some interesting little comments from some of the presidents that are talking it up right now. They're still able to talk right now. We're not, I guess my expectations as we go forward is another 25 in May, and then maybe a pause, but that'll put us up at that terminal rate I've been talking about for a while. 5.25, 5.5 range is where the terminal rate is heading, I believe. So looking back on yesterday, S&P flat, NASDAQ down 0.43, and Russell, I talked to you about last night how the Russell had a much better profile. It was up 0.8. So there's some pretty decent flow into these small cap stocks, starting to see some rotation a little bit. There is some positive movement in the database yet still occurring. And this is, I think the story is getting more and more interesting as we go on. Before I get into anything else tonight, I've got a couple things that, well, let me just finish one thing here. Don't let me get ahead of myself here. But just on the Fed, I think what you're going to hear is they're going to continue with QT. They're not going to back off of that. They're actually lagging a little bit in the MBS sales, but on the treasuries, they're pretty much in line. They're getting close to where they should be here on QT. And that number, they can pause here and continue QT. Even if they paused in May, it wouldn't really matter. They're going to continue the QT, and they're still not getting you folks unemployed yet. They want us unemployed, and they can't seem to get that unemployment number to roll over any significance. We'll see when we come into Thursday, see if we can get claims and continuing claims to creep up some more. That's kind of where the meter I'm watching right now. And maybe there's a little tension coming into the labor markets, but it doesn't look like it's going to be material. Okay, so let's talk about something. My plans, tentative plans. So if you don't follow me on Twitter right now, follow me on Twitter, because this is what I'm not going to probably be in a position to do any kind of YouTube type stuff when I'm out of town, but I think I'm going to be in a position to do maybe early morning, shortly around the open, afterward, shortly after the open, I'll do a Twitter space, and I'll put up some of the things that I have, the market grade, a couple other things, and we'll have an open discussion, and possibly I'll bring in some other folks at that time. I'm going to be in a completely different time zone, so I'll be upside down from where I'll be literally about 12 hours ahead of you folks on Monday of next week. So we'll do something like that on Twitter Space, and then maybe there's some opportunity at least a couple of the days to do things. I'm just thinking through this. I think I will be able to do most of the days, and I'll just put everything out on Twitter. That's why I'm going to communicate to you folks. Maybe I'll be able to get some of these things and put them in on, maybe a follow-up or some kind of recording and put it on YouTube. I'll just see how it goes from there. So just along that line, if you do depend on these numbers, just get the indicators. It's a one-time sale. I'm just going to pitch this thing just because I'm going to be out of town. I know I get emails. We get a lot of emails about, I didn't make the market grid big enough on the screen when I'm showing you all that kind of stuff. Just get the indicators. Then you have market grid and all these indicators on everything on TradingView only. And it's preferred that you get a pro version of TradingView, but you don't have to have it. You can actually, I think, put 2 indicators at a time, but you can get all the stuff that I show you every night. And I just think it's an advantage because I just show you on a few markets. You could have it on your favorite stocks, all that stuff. So you go to kendallreport.com/indicators and sign up there. I would do that. I think it's going to be a big advantage for you folks going forward. And then we are starting some mastermind classes in May, which are going to cover some educational stuff, and we'll be announcing that one after I get back on my trip. I said I'll be gone through the 17th through the 21st, so should be back on that Sunday night if I'm not jet lagged out. So we'll see how that goes as well. But I'll use Twitter to communicate, and we'll also do some email stuff as well to keep everybody up to speed. Okay, so back into the stream here. Let's talk a little bit about the final thing that I want to talk about here is some of the other rotation that's going on in the market. Yesterday, in spite of it being flat, 9 of the 11 sectors were up. Of course, we saw the big mover in the markets right now, Bitcoin at 30,233. So it's still on that run heading towards some of those numbers I talked about last night. So very interesting scenario. And I have some opinions about what I think's going on there with Bitcoin and the big dialogue before I get into the rest of tonight. The big dialogue out there and the big narrative that's being flown around is this whole BRICS US dollar coming to the end. I think I'll just make a brief comment on this. I believe that there's a number of things going on that may be affecting Bitcoin. CBDC, which is a central bank digital currency, rumors. We saw the stuff from Lagarde in Europe and talking about if you spend more than $1,000 cash, you could be arrested. How absolutely crazy is that you can't spend your own money if you have cash? And I was talking to somebody earlier today, and in the coffers, I used to make a joke here, and I'll bring this into this conversation, is that there's a lot of old, stinky, moldy money. There's several areas in the country that these people just have these big safes, and there's literally stacks of dollars in there. I kid you not, this exists. And I always talked about this old moldy money. They had to scrape off the mold before they could use it, clean the dollars up. But there is all kinds of cash out there. So the Fed hasn't been able to account for a lot of this cash for a very long time. They know it's out there. They just don't know where it is. So this is going to be an effort to bring that in. And I would say maybe Bitcoin's getting a bid because of that, as well as the BRICS scenario that's playing in there, psychology in the market. I think folks are going, gee, maybe I ought to have a couple $1,000s worth of Bitcoin or whatever, right? And so I think there's some play that's going on here. There seems to be quite a bit of momentum behind this move. And as I was showing you last night, and I will go through here shortly on the technicals, on the weekly, there's still quite a bit of upward momentum here. They're very big numbers we're talking Bitcoin now. So, and I'll go through this in detail, but I just want to put that out there. Meanwhile, I don't see a lot of negative movement in the US dollar right now, but there's some sentiment going on there that seems to be pushing the markets in the direction they are going right now. I think the configuration over the last, let's say, go back to SVB and the whole little mini, there was no banking crisis, but there was definitely a shockwave that hit some banks, or a few banks out there. As I told you at the time, this is not a systemic issue. There's a whole bunch of people out there on the internet trying to tell you thousands and thousands of banks are going to fail. They're not going to fail. I don't think that's at all what's going on. But it makes for good clickbait, and those guys are going to play that. As long as they're getting clicks, they're going to keep going. And as long as everybody's nervous about that, that old fear sells is a good one. That's why zero hedge exists, right? If it wasn't for that, there would be no zero hedge website, right? Nothing would be there. So anyway, enough of that, but I just wanted to bring that perspective in. I think there is something going on out there, that underlying sentiment that has switched. It's driving some of the flows that we're seeing here. So that being said, let's go ahead and get into the rest of the broadcast and go through the Wavetech database. All right, so as we go to the database, we are at 43.09% bullish. So we're above 42. I've been talking about this number. We broke out today, so we continue to get some traction here, even though markets didn't have to make a big move. And I keep explaining what's going on here for you folks, is that what we're seeing is that the rotation in the market just keeps getting traction as we go sideways. I'll show you here in the technicals, and I've discussed this before, but I'm going to go through it tonight just to bring in the perspective. But as these markets just kind of grind here, they continue to put up let's just say they continue to get more and more breadth in the markets from a trending standpoint. Not necessarily, I have no idea how many stocks are above the 200 or whatever number, doesn't matter. What does matter is, are they signaling trends? And like I've told you before, from my viewpoint, is I have a unique position that I have 15,700 plus symbols operating in the view of how I see the world with my models that I developed. And not only that, I followed this database for, since it's been in existence, which goes back actually technically to 1996. So we're talking almost 30 years here. In a couple of years, that'll be 30 years. So the perspective that I keep bringing in here is that what happens is when the markets start to grind here, like we've seen, we were at 39.50, 40.50. Now we're trading 41.50, and we keep kind of grinding. And now maybe it's 40.50, 41.50, and we're just getting this really grinding type fashion configuration. But what happens during this time is that you continue to see more and more stocks come into the fold from a trending standpoint. And if you recall, in the rally, earlier in this rally, going back to the October lows, we got up to almost 80% long, or 80% bullish, and then we backed all the way down. We did a full liquidation here, all the way down below sub 20%, and now we're rebuilding. I told you it was going to take 4 to 6 weeks to rebuild the database. If we got stability, we start to see more and more of these minor or short-term trends come into play. And of course, on the intermediate models, we're above 60% there. So it's even stronger on the longer term, which, as I went through the other night, I talked about the forward-looking part of that, which is telling us that, we're looking into Q3 easily of a generally positive tone in a lot of stocks, like 10,000 of them. Okay, so there's not just a couple stocks, and I know a lot of you probably trade indexes and options on indexes, but in the end, there's a lot more to the market when you get below the surface. To me, the indexes are like the top of the water. You have to go underneath and see what's going on underneath and see if there's some things that are evolving here. And we're definitely seeing that over the past, let's say first Q1 coming into this year was a pretty good cycle. And now as we get into Q2, we're still seeing this continuation. I talked about this, just to ramble on for a minute, is that March and April tend to be reasonably positive. You know, like I said, we got down to even the 37 handle briefly, but that we came right out of there very quickly. And here we are at 41, playing around with 41.50, 41 even, 41.50 right now. And so I think we continue to evolve into 42, 40, 44 plus handle as we get in toward the end of April, maybe even into May. And if we do get into the sell in May and go away mode, it will be very late May before we even see any kind of reaction. I think mid to late May. We'll see how it sets up. I reserve the right to change my mind. But it looks to me that's how we're set up there. So let's go ahead and get into the technicals and see how everything's set up. All right, we'll go into the daily. You folks are going to, I didn't do a good job. I am just dehydrated here. I need to get, it has turned into summer here in Arizona already. We're 85, it's really dried out. So I apologize. I just got to grab a bottle of water. One sec. Okay, this is a very interesting pattern that I've got here on the hourly chart. We're looking at the hourly. Usually it's pretty straightforward. What happened is that last hour in markets yesterday that we got this big hit. This actually, through one of, I talked about this before. Let me just come up and talk about this. What we get is when you get one of these big volatility bars, there's several of them. I will draw them on the screen here just so you can see them, because I think that is going, this is important to understand here. And bear with me a second here. Okay, so let's draw in a couple of things that I think are going to be interesting to look at. So I'm drawing around these bubbles here, and this whole area here I'm going to draw around it. But this specifically was this arrow here, as I talked about before, is what happens is you get these volatility blowups. This is on an intraday, these things happen. So those of you that have the indicators, this is the market grid will expand out with the volatility as the bar volatility expands, and then it contracts in. And it takes anywhere from about 6 bars to 10 bars to get into this contraction mode. And now you can see we've contracted down. The interesting thing here from my viewpoint is that what we're seeing here is we have both upward and downward projections on from the standpoint of the fib targets. And this will happen, and typically what we'll do is we're going to push toward the direction of the PPMs here. So if the PPMs are pointing down, you can see the algos are suggesting they're down. And just so you know, I just bring this up real quick. Bo had asked earlier, as what was I set at? These are set at 50, and it makes it easier for me to do these presentations, because when I go to longer term charts, there's not enough bars to run the 150. But if you have the indicators, I would keep them. 150 is a good number. 50 works. The projections are very similar, but on the shorter term stuff, when you have plenty of data, I would use the 150 setting, just for the record there. But it just makes it, I'm setting here, making setting changes all the time. So, but the fib targets here, it's interesting because if we look at these targets just on an hourly chart here, okay, so let's go into this just for a little bit. 41.31 is low target 1, 41.23, and then 41.19 on the downside. On the upside, 55, 41, 55, 64, and 69. So we get this huge range of 31 to 69 on this hourly chart. And one of these are going to be what I call an island projection. They're not going to be hit. And I'm going to go, right now the algos are suggesting, I talk about this as well. It looks like as we come in about an hour or so before London, we should start to continue to trade down here. And maybe we get towards this fib target 1, which right now is 31 handle. And we'll go through the market grid here in a minute to line this all up, because market grid's been incredibly accurate in the last several sessions. So we'll go through this in just a sec. But you'll notice that not only are the algos on the PPMs, they're reflected also in the projected ranges. You can see that the white line up here at the top is actually coming down, which is the 10-period moving average. It's starting to show a decline. That's why you see that this is actually being generated from this PPM value. So the projected future value is that the moving averages are going to roll over. So the downside targets probably have more validity here than the upside. And so let's just play this just a little bit more, okay? Just from a trading standpoint, when you're coming into tomorrow, and we're coming into a major support like we get, especially one that's going to come out before market open, right? You're going to get local time. I'm on Pacific time, so that's 5:30 a.m. You're going to get some kind of volatility spike. Guess what? We're going to get another bubble here on this market, and then if you have the market grid, you're going to see that start to narrow back in. But it's going to take on an hourly basis. If we do get a fairly decent spike, you're looking at the rest of the session of really the market trying to just to normalize again. When data gets disrupted, I won't go too deep into the math on this, but I will spend a few minutes, is that when you get the volatility to expand like that, the normalization of the ranges should go back into more of a normal range versus the bubble range, right? So you're going to get a contraction. Like I said, it's going to take probably, we're talking 5:30 in the morning, so an hour before the U.S. Open. You're probably looking at 4 or 5 hours into the session before the normalization happens. And it's at that point that you're going to be able to make a determination on the ranges and where we are. So I'm going to tie this whole little discussion together with utilizing the daily market grid as well, so you can kind of tie into whether, every night I put out, whether it's going to be an S1, R1, whatever. I'm going to do that in a minute, but we're wanting to look at these Fibonacci targets on the hourly, see how they line up, see what kind of volatility we get. So a lot of times, those of you who've been around this channel for a while, I talk about that reaction trade a lot. If you're a day trader, you get that big reaction, especially if you come into one of these fib targets or maybe a daily market grid number or something like that. You can play off of that, take the other side. Usually there's anywhere from a 2 to 8 minute, maybe as many as 10-minute scalp. And you can really take the other side. So if it spikes down, you buy it, and then you scalp out of it. You don't get bullish for the rest of the day off of that. But there's a lot of opportunities off that volatility. Then you wait for the contraction. Since I won't be here with you live tomorrow, so then you wait for the contraction of the market grid to contract on the hourly. And you can also use some of the 1 minute, 5 minute, those of you who've been in the live room, you can use those setups to watch that squeeze happen. You should be able to, it's very predictable on what's likely to happen after this volatility spike occurs, okay? So let's go over and take a look real quick at the daily market grid, just to get a feel for that. And I'll try to tie all this together here. I've been talking about the last few days. Let me go off screen here. I've been talking about the last few days all this upward slope, we were talking about the angle of attack here. So if I increase this, you'll see angle of attack is starting to flatten out in the next 2 sessions is the projection. You can see the PPMs are flattening out. You see the same thing on PPM 1 and 2. PPM 3, however, is starting to turn up, which is a longer term meaning going into the next 2 weeks is more of a bullish scenario, because this is starting to expand. So you can see that the cyan line here is starting to turn up. We also have a reasonably good angle even on the 200 period moving average on the daily. So, but if we look at this from the standpoint of what's going on, we should continue to remain above the PPM1 is at a 0.33. We should remain above the 10 period moving average, which is right now at 41.21. If you remember, just if we went back to the hourly, I'll just take these numbers, that the very first minimum number was 31. So we're likely to come back to the 21 number, and we'll look at, I know it's small over on the right-hand side, but let's look at this. S1, 28, S2 is 18. So we're looking at probably an S2 on this, and let me just make sure I got the right numbers here. Yeah, so R2 is 54, that'd be a retest. So we're probably looking at S2, R2. Mainly what's happened here, and this is what I've been trying to discuss. I know I'm going fairly detailed tonight, but what's happening here is the overall daily volatility ranges are contracting. They're getting basically the last 3 sessions have been narrowed, especially yesterday was an extremely narrow range. So this is tightening in the volatility, which then gives us more of a likelihood that we're going to get a spike when that happens. It tends to lean to the downside here. So if we go back to that hourly chart here, I'm going to flop back here because I want to tie this together just so you can see it. I'm going to go back and forth for just a minute. But if we look at these objectives here, look at this. Fib target 2 is 23. Fib target 3 puts us right into S2. Okay, so that's what we want to look at, and that also puts us into a 200-hour moving average range as well. And that's got a reasonably good upslope right now. It's still positive, but these are the target zones. So I'm going to suggest as we go through this scenario right now, I'm going back to daily here. And what I'm going to suggest is this spike could be down toward the S2 level tomorrow from that standpoint. Okay, so look into that range. There are some other numbers that have been laying out there last couple sessions, as we have some on a daily chart. We have some bigger numbers down here, all the way down at 39.28 is low target 1 on a fib. I don't believe these are valid, not with these upward slopes here. I think these are what I call an island type projection where they never get hit. We get those often in this pattern. Like I said a minute ago, you want to go with the PPMs are starting to turn over in the next couple of days. I think ultimately the number you're going to look at is going to be back to 40, 50, 40, 80 level, just on a normal volatility. It does look like we're probably going to lean a little bit to the downside. Of course, we get a 0.2 number tomorrow, they'll spike it up, and everything everything I just said will be wrong. But those are what the setup is looking at right now, is that we're probably going to have to test this 21 before we go higher. And there's an old rule that we put together many, many years ago, like in 1985 maybe, is typically the first bounce off of the 21 period moving average, which is the red line, usually goes to new highs. So if we do print down in the next couple of days down that level, then typically we should get a reversal or a pretty pretty big bounce off of those support lines off of that moving average. So I said it was going to be fairly quick, but I ended up going into this deep dive on these patterns that are out there, primarily because we're coming into this volatility range tomorrow, and I think you need to understand what some of the probabilities. It looks like the upside probabilities are reasonably limited right now. That last hour sell-off that we saw off of the 51 handle, that was pretty significant. You know, we're back right now trading 36, about not quite 20 handles, but like I said, we're probably looking at a minimum down to 22, 31, 41, 22, 31, 18, which put us S2, S3 potential for tomorrow. And this could be right off of this CPI number, okay? And then if you're trading in those range, I'm going to finish, I promise. If you trade down into that range, what you're going to see then is probably an opportunity to play a bounce. And a lot of times if you go to S3, R2, R1, I'm sorry, if we go to S3, S2, S1 will actually be resistant points. And if you break it down using at least a 5-minute or the hourly chart, you should be able to target some pretty good values in there. So I got you set up for some pretty good trades in the morning. Be there or be square, okay? So, but this setup is kind of interesting. Sometimes when I do these nightly streams, there's nothing premeditated. I just go through the analysis live with you. So I'm not making up stuff ahead of time where I've got some kind of agenda. I literally read these charts and look at what the metrics are telling us. So with the volatility contracting, typically when volatility contracts a lot, the potential swing is to the downside. So be a little bit cautious there. Okay, I think I'm done. Let's go on to NASDAQ. Okay. Looking at NASDAQ, and this is the other scenario. So this actually just confirms what I was just talking about. And what I'm talking about here is that these moving averages are rolling over. I know the last couple of days I've been talking about that today is the day that we should hit the top. If you look at the PPMs here on PPM 1, 2, and 3, everything's rolling over. You can see the white line, which is the 10 period, it's just a 10 SMA. That is rolling over. The 21's flattened. There's a crossover to the downside. So we're looking at probably coming back in on the NASDAQ ultimately toward this upsloping 40-period moving average, which is right now 12,571. That would be your target. It's up a little bit, not a lot. Yeah, but just say 12,560, 12,570, all that. We should be about in that range. We also have some fib targets here that I will discuss here on here, and they're 12,901, 12,730, and 12,624 puts us. You can see these. Let me expand them out so we can make sure you're seeing these red dots. In fact, I'm going to go completely. I'm going to draw them in for you just so you can see them. But this is the box range right here. You can see the red dots inside this box. Those are the points that we're looking at right here on those fib targets. That's the 12,900, 12,730, and 12,600. That would be the downward target. And here's your 40-period moving average at 12,571. Still on a nice upslope. That ends up to be your support level. There's also, before we get there, so let me back out of some of this stuff. There's also, right where this fib target 1 is, we got an upward slope on PPM 2, and the 21-period moving average is right there at 12,904. So right where that fib target is where that moving average is at. And it's also, okay, I'm going to keep going, it's also within the context of the market grid. So if we go and take a look at the market grid here, what we'll see is we're looking at 12,914 is S3 for tomorrow. So S3 is in play, I believe, and S2, S3 on this, just like with the E-mini S&P, we're looking at S2, S3 there as well. And so it looks like a setup for some downward action. And if you look at the NASDAQ, the way it traded yesterday, we get a reversal pattern, close back under the 10, and then we've got the algos just screaming downside, heading for a test. And even here, we're looking at PPM2 right now is 0.37, which is trend mode. So if we do hit there, there's probably a bounce off of there. I don't expect any kind of major collapse out of this pattern, but we should trade. If we get down to that level, we probably get sandwiched between the 21 and the 10 for at least a day. I'll set that up tomorrow night as we get through there. So check this out, folks. Look at this. Look at the angle of attack that is building on the Russell. And like I said yesterday, there's all kinds of stuff going on the screen right now. This is one of those nights I walked into a complete beehive here. There's just all kinds of, so we have 3 upward projections, 1877, 1924, 1954. That's, let me just draw all this in. There's just way too much going on here, folks. This was actually ended up being more fun than I expected. So this box, hang on. This box formation here, this is your target range up here, and we're looking at this angle of attack on the 10. We should be able to stay. Look at this. PPM1 still not tried it at 10 at trend mode, but PPM1 and 2 are expanding. They're suggesting that we're going to see more, that we are going to get into trend mode, and then ultimately a target into this box range is where we're likely to go. And this is very interesting, and I'll try to tie this together, what the bigger picture is telling us here. Okay, but these angles of attack, this is crazy. This is really, really good stuff here from the standpoint. You can see the 10 is going to cross through the 40. This is what a bottom looks like, folks. This is how it sets up. And then ultimately we climb this line. If we went back, and I could do that, but go back to the S&P, this was like, there's been these stocks have been so out of favor, but during that time, we just built this consolidation range over here. Let me get rid of that. I want this here is where we get into this bubble range, and then we get into this pattern here, which is basically a 1, 2, and by the way, this right here, our algos, we have something called a pattern finder, and it marks all these lows, and then it projects these patterns. I built this in 1992, believe it or not. We built this in Logic to identify these things because they didn't want to miss them, because these are big patterns. So what we've got here is the setup is here for what I call a 1, 2, 3 pattern. And just to tell you what this is, and this is another reason, folks, I'm telling you to have these indicators on your desktop, is one is that the length, I'm gonna pull a bunch of this stuff off here real quick. So this length here and here, when that equal is right here, that's where it's going to be equal. These other 2 levels, targets, are multiples on a Fibonacci level. So they are 1.382 times the length of 1, which is right here. And then the length of One also could be 1.618. There's other values you could get into 2.382 and beyond, but these are just the basic. These patterns typically will set up here, and they lie everywhere in these patterns. And one of the things that I taught in the live room is these 1, 2, 3 patterns that set up, and there's just a ton of money playing these. But it's interesting, and here's my point. I'm finally going to get to the point. The point is that what's interesting is while the other indexes are going to correct, so we know that the NASDAQ is up 14+%, the S&P is up 6+%, but the Russell has been negative like 0.7. Maybe after yesterday is now at 0.1.5. So there's been a big lag, and I've been talking about that these stocks are going to start to rotate in for a while. I've been talking about these secondary stocks, which is the small cap, mid cap stocks that are going to come into play. And I think a lot of this, I thought it was going to buzz through tonight, and it's not going to be the case. There's just so many things to put together. And what I try to do on this channel, so is I try to give you folks all the tools I have so that you can do this stuff and you understand the logic and the thought process behind it. Yeah, I've got like about 35 years in this thought process. So I've been thinking like this for a long time and using them in the markets. It's part of the logic that's buried into our trading models as well. But the bottom line is, this is like amazing pattern. Here's what it's telling us. I'm going to tie this down finally. Okay. What it's telling us is that there's not a big probability of the other indices, the S&P and the NASDAQ, just outright collapsing and going down. They're going to correct into their support levels. They're going to refresh a bit, and these stocks are going to start to lead on the next phase. If we're going to get a really stronger April, right, these stocks need to lead. And this pattern is telling us that they are going to do just that. So we should start to see some leadership come out of the small cap. And if we get that, then that's going to wake up a bunch of people, because let's face it, there's been a lot of FANG talk, and the large cap, the techie stocks have done really well, but I think they start to come out of favor a little bit. Maybe you start to roll a little bit with the Apples. You saw Microsoft down to, even Amazon got hammered, I think 2.3 today. So there's a rotation going on in those large caps. The money's going here. I've been telling folks forever and ever, if you want to, our job is to figure out cash flow. So if money's going to come out of that sector, out of S&P/NASDAQ, where's it going? It's going somewhere. It's even going to bonds. It's going to some other stocks. So folks are going to start to look for what's cheap, and what's cheap is right here. I think I got much deeper than I thought I would, but this should wrap up the indexes. The rest of this should go pretty quick. I won't promise, but there's so many little hooks and things that are commingled in here. It's really important to understand these things. And if you can listen, we all trade better. And I tell everybody, the reason why I'm here talking and explaining this is I'm setting up my own trades here. I'm figuring this out with you folks. I'm showing you what's coming to my mind here, because this is important. When you have that perspective, you will trade what you understand and what you believe in. You'll make a lot more money if you can get into understanding the context and where the trigger points are and all that stuff. All right, I'm done. Got into kind of a Professor Bob tonight. Sorry about that, but this is, I think, a really good understanding of the rotation of the market. It's obvious from the technicals. You very seldom see this type setup here that you can actually call out all these little intricate parts, and it's like this. What's the comment? Stars are lined up perfectly. That's what it appears here. So we should, to summarize the whole index thing I just went through, looks like potential downside on the down towards the 21 period moving average S&P and NASDAQ, maybe down to the 40 period moving average on NASDAQ. little deeper correction. It's been a little stronger, a little more give up there. Look for some of these high tech stocks to roll just a bit, and then what you should see, the small caps start to play in. So I think I've sunk the same putt 3 times, but let's go on and let's get into the rest of tonight's video. All right, so the 10-year, going through the interest rates here. Man, I really got off on that, didn't I? That was a lot. I hope you folks study that a little bit and tear apart what I said, because I think there was some those pretty epic moments. Sometimes I get into these flow of consciousness. So interesting scenario here. 10-year is continuing to move up as I've been talking about it, move up to 340. We're right into that moving averages that I was talking to, 343. We should ultimately see 350 plus. And I think we come up into this range here. It's interesting because we don't normally see it, but there are crazy gaps all over the place on this chart. That's amazing. The volatility in the bond market has been unbelievably huge. And I guess it makes sense with the SPVs and the signatures and some of the scuttlebutt that's been going on around the banking system. But so we're starting, I think what we're trying to do is try to normalize here, get back to 350 plus. Ultimately, we probably see 365 on the 10-year, and we start to move that up. I had some notes that I drew a little yield curve on my notes for tonight, and I thought it was interesting because we have the 2-year right now at 402, the 5 at 355, the 10 343. These are all rounded numbers, and then the 30 362. So we basically have a U shape where if the 30-year, if we do start to see some increase, the 30-year gets up around 3.8 plus, then that's going to set up a really interesting story, especially on, and I'm going to try to set this up, this a 230 spread versus a 210. A 230 spread might be very revealing. I'll try to get this set up for tomorrow night. So we'll go that to understand what's happening here. But it looks to me like the yield curve's trying to normalize again, and it may have a lot to do with what's going on from after the little banking fund. If you notice, the Fed's balance sheet started to contract a fair amount recently. Some of this money that went in is already starting to come out. Things are normalizing, and this was the scenario that I painted. If we go back, back to the beginning of the crisis, we go back into, I guess we'll call it back into, March 10th, the early to mid March, when all this was going on. All of a sudden, this was my previous sermon, is that we were going to see this thing all normalize. The sky was not falling. The banking system is not going to collapse. There's not thousands of banks about to close their doors. That's not what's going on. That's maybe, like I said, that whole scenario around Bitcoin. I'll go into that a little bit more. So, and I'm just looking at the clock here. I get started pretty good tonight. We're already about an hour in. So I appreciate everybody hanging out. I really do. If you're watching the replay, make sure you're commenting on some of the technical, we'll call educational stuff that I did tonight. But the patterns that are setting up here on the interest rates, that it was just kind of interesting. If I could, I guess I didn't set it up, but if I showed you my sheet here, that's exactly, it's a U-shaped curve. Starting, the back end is starting to creep up on the 30. And if we see what I'm talking about here, where the 10-year starts to move back into 350 plus, maybe 360. There's a potential to come all the way back to this 40 period moving average, which is around the 365 level. It's downsloping, but that will, if that occurs, then that means that the system is normalizing and we're kind of going back to the next phase again. So all of a sudden, you know, we're sitting here in about a month. I forget when the exact date is of the Fed meeting, but we're probably a month out on that. And so that, you know, roughly a month looking forward. By the time we get there, things should be normalized. Everything should be okay. What's next, kind of thing for that, and then we'll be able to judge that much better. So, man, I don't know how to say this. I was a big Fed critic for a long time, and I think in spite of the SBV, Signature Bank, couple other situations out there in the banking system, they have actually they've managed to get through this pretty smoothly, and it's going to get really, really interesting as we come into, like I said, as we go more into Q2 and start to see what happens. Like I said, I think there's still positive mode. My biggest concern for this year is sometime in early to mid Q3 is where, at least looking out, trying to anticipate something, that is where I'm seeing the potential for some disruption of these trends. That also puts our database back into getting mature on a short-term basis. So that would be probably a time where we could actually do some kind of negative rotation. Is the short-term database, everything that I do on this channel, it has so much to do with understanding how that rotation is likely to happen on the short-term database. So here, the scenario is that short-term database is now, what I tell you, 4309. If it continues to evolve through the month of April, maybe into May, all of a sudden we get 60, 70, 80% long. We're going to get another rotation. We're going to sell out of those. And then we get a rotation like, and I'll just try to explain this real quick, is that what happens as the database sees more and more trends and they get it mature, the early trends start to sell out. So you see the percent bullish go down, and then you see everything roll over. And in the intermediate, I showed you the chart of the forward looking in the intermediate or the weekly trades. Those are still elongated and taking us into that Q3 level. And how we set up between now and then, I should be able, from a technical forward looking standpoint, seeing where we are in the database, I should be able to guide us pretty closely through what's likely to go on for the coming into that Q3 area. But it looks right now that everything's rolling forward, and especially in this, back to the interest rates, is especially if we get a normalization here of interest rates and we get back and some of these yield curve things that I'm watching start to occur as well. And if that happens, then we should be in pretty good shape. So in case you missed it earlier, you just joined or something, I just want to put this out. Next week there won't be any YouTube channel, but I am going to do Twitter Spaces, just because it's going to be easy for me to talk, not to generate a bunch of video, and I'll put screenshots of things that are out there that I use every night so I can discuss them, and it will be more at or around the U.S. Open to potentially in the first hour or so, but probably right around the U.S. Open is when those spaces will happen. So you have to adjust your schedule accordingly, but that at least I'll have some contact with you. So you don't follow me on Twitter, it's PortfolioXpert. There's no E in expert. So Portfolio, then X, just the X, PERT. That'll get you to the YouTube channel, and I'll YouTube to the Twitter handle, and I'll try to communicate the best I can from that standpoint going forward. So make sure you go there. Real quick before I do move on, after all that and distractions, yeah, I actually this was even more interesting. It argues to confirm what I was just talking about. The PPMs are, this is the 2-year yields. Look like we've got targets. I mentioned this last night. This is a new target, 526. Let me get the exact 26.3, 426.3. I said 426.3 puts us up toward this 40-period moving average. The algos are all suggesting, you can see the angle of attack that looks like it should build on the 10-period moving average. You can see that upward white line here. And you'll see right here that this is ultimately saying we're going to cross. This is quite a few days. This is daily. So this is like 8-10 days in the future. So this is going to change, but it does look like we're going to have upward momentum moving towards that 4.25, and we're printing right now 403. So we definitely have the whole situation should continue to move up. Like I said, I'll try to set up something for that 230 spread, which I think is going to be worth watching. All right, if you made it this far, congratulations. Bob is really going tonight. Hour 19. I'm out of control tonight. I thought I was going to be quick. Okay, so here we are at crude. We still have crude, gold, and Bitcoin to do. So anyway, I should have told you it was popcorn night. So here's what's going on. On the crude oil, I've been talking about moving up toward this 200-day moving average. We're getting pretty close. Pretty decent downslope on the 200, which suggests that even if we trade above it, we should get rejected from there. So watch those numbers really, really closely. The 200's at 83.80. Last trade right now here is 81.51. We got pretty big reversal. We got a bounce yesterday right around, I believe it was right around S3. Let's just take a look here. S3 78.61. Yesterday's low 79.37. Let me go back to those numbers here real quick. 79.37. Yeah, so S1 79.39. S1. So we actually traded all the way up to RTX 81.22. So that was 81.66. We traded just under that. But we're seeing that a new upper channel set up. Here's the thing that's really I want to focus on. If you look at the slope of what's being projected on this 10-period moving average, what that slope is doing is suggesting we're going to stay above these values here, and we probably get sandwiched really tight against this 200. And the configuration it sets up here will tell us a lot more, but it looks like everything's going to peak out. We're probably going to end up heading back just like towards 77, maybe 76 level at some point, but we're looking multiple days in the future. Just count on staying above the SMA 10 for the moment, and we'll see how this unfolds, but there doesn't seem to be any big rollover other than it looks like the 10 could be challenged, and then ultimately we head down to the 21, which will be a pretty substantial support at that level. Looking at gold, we're still hanging above that 10-period moving average. Yesterday, we had a low of 0.3, and get an exact number, 0.370. The 10-period moving average, 0.477. So a buck off of that, we got a little bit of a bounce. We're seeing some follow through tonight, up 12.42. So we're trading right now. Let's get to the market grid. On a daily, we're trading up toward right now. R1 is 24. R2 is 29. So we're getting we're above there. We're above R2. So R3, just trying to get the numbers here. R3 then is 35. So we're almost R3 on this mode, but we should stay above the 10. I've been talking about this weakening pattern, but if we look at where we are, what we did was the momentum of the 10 period moving average rolled over. It hasn't gotten to the point where it's vulnerable to the downside. That's probably in the next couple of days. And I keep arguing that there's some fib targets that came in today as well on the downside. And let me just bring those up so you can see them. They are 1998, 1978, 1966. Every time I look around, the 1960 handle comes into play, and we're looking at a move down to the 21 period moving average. What we'd have to see after today is some movement down, and then ultimately getting a reversal, and the channel starts to turn down on the daily, and then we get some retracement heading toward those numbers between 80 and 65. There's just a lot of clustered numbers that we've been looking at. That's where all this support level is over here that we printed through March. These were all bouncing numbers around 65, trading back up towards 2,000. Now we're seeing a decent print over 2,000 here. So I'll do more long-term stuff maybe for the weekend before I head out. Bear with me a second. The normal chart I used was not this is not the usual channel that I'm looking at, but we'll go ahead and use this. This is some of those upward ranges that I was talking about yesterday on the market grid. So we're seeing the daily is still up. We still have that positive slope here on the 10 period moving average. I don't believe, like I said before, we don't have any targets to the upside right now. I just want to go over the weekly, because the weekly market grid, and I discussed this just last night, on the top end is 3322, and we printed up here to 3488, so we went just above that. That's a pretty monster move, but look at this. We bounced right off of this 10 period moving average, and if you look at that angle of attack here, where the 10 is projected to go through the 200. This is a weekly chart, so through the 200 week. This is overall, if I reduce this down a bit, so you can see this overall is the stair-stepping pattern. If, as we come in next week, this market grid turns back up, we could form a new channel. We'll start to get some potential higher prices here. And like I said, the algos are suggesting going to flatten off, but we're at a 2.5 on the trend level. So there's a lot of potential upside yet for this trend to continue. I don't see a giant acceleration, but anything's possible. I talked a lot on the opening comments about maybe what's affecting the sentiment here in Bitcoin. And I think there's even an exodus going on with Ethereum. There's a lot of stuff going on in the space, and it's become pretty obvious that crypto versus Bitcoin is a whole different conversation to have. But it does look like there's definitely some things going on here where maybe it has everything to do, as I mentioned earlier. If you just joined, go and watch the opening comments. I did a bit of talking about what's going on, with the BRICS and the US dollar and CBDC, all these elements that are out there are affecting what's going on with the markets right now and what the sentiment is and Bitcoin. And I think there's a combination of a lot of stuff where folks are thinking maybe we ought to buy it. I think we've doubled in price since Kramer said that it was going to go down at 15,000 or something. So this is like one of the best Kramer trades yet. And anyway, let's see where we are in timing. Not too bad, 1 hour and 10. So I think I can finally get out of this thing. I appreciate it. Let me come back on the other screen here 1 second. All right, folks. Good session tonight. I enjoyed it. Hopefully you did. I would just make sure you make some comments here on the videos. Remember that next week, if you want to get any thoughts from me, it's going to be on Twitter. So follow me on Twitter, and I'm PortfolioXpert. There's no E in the expert. So just Portfolio, then Expert. And, just go there, and I will do some live spaces, and probably around the open of the U.S. Open will be when that happens. Maybe even a half hour before, but I'll put out a tweet when I'm going to do that. Okay, so we'll see somewhere even before, around the open, somewhere around that range. I should be able to do that. I'm not 100% of every day of my availability, but I will let you know as it goes. So make sure you follow me there. Yeah. Thanks, FF. So it's in the timeline if you guys got it. So make sure. Thank you, Smurfs. Thank you, everyone that showed up tonight. And as Bo said, hit the like button, subscribe, do all that stuff. And we'll see you tomorrow night, same time. Good luck trading. We should have a lot of fun off the open. We'll see you then.